Hi, good morning, good evening. I don't hope you're doing all right. Thank you so much for tuning in. My name is Matthews from M&F Traders, and first of all, I'd like to apologize for not being consistent with the videos. I know we promised that you're going to be producing 2 videos a week, but we haven't been able to do that because of some certain circumstances beyond our control. However, I'd like to tell you that we are back again and we'll be consistent. And yeah, so please, if you're a returning subscriber, we thank you so much for coming through. If you're a new subscriber, please thank you so much as well for joining the team. Otherwise, we are not wasting so much of your time. I'd like to get started to this very important video, like one of the most important videos I'm going ever to produce. And as you can see from the title, it's supply and demand trading course. So, what are you going to look forward to during this course? Okay, so these are the things we're going to look at today. So, we're going to look at the definition for supply and demand. We're going to look at how do we identify these zones, supply and demand zones. How do we draw supply and demand zones? And what are the most important 5 odd enhancers of supply and demand? And how to trade supply and demand? And also, what confirmation do we look for before placing trades on these supply and demand zones? So, as you can see from the table of content, it's going to be very, very, very important. And I would appreciate that you watch the video up to the end, because what I'm going to tell you today it's going to be something that can actually change your trading career, can actually improve your trading career from where it is right now. I know most of the people who are watching this video right now are beginners, and I already have the confidence that this can actually help you become a better trader. All right. So if this is the first time you're actually hearing about supply and demand, I'm going to be very, very simple. I don't want to complicate things. So please, let's get started without wasting much of your time. Okay. So what is supply and demand? In simple terms, what is supply and demand? So supply is simply excessive selling pressure caused by the smart money. You know what we mean by smart money, guys? We mean the banks, the hedge funds, etc. And what is demand? Demand is simply excessive buying pressure, which is caused by the smart money. Basically, it's as simple as that. Excessive buying and excessive selling. All right, let's move on. So from here, we can see where we're having a lot of selling pressure, right? Look at this. This is where the selling pressure was, and what happened? Price after price left this area, price came back to this level and dropped again. All right. So this makes a good supply zone. All right. What is a demand zone? An area where there are more buyers, right? Or more buying pressure. When price comes to that level, price pushes to the upside, and you wait for price to come to that level again. Yeah, basically we'll get into that. So this is definition, all right? The supply is excessive selling, and demand is excessive buying, right? Basically like that. So this is some of the few examples, and yeah, we'll get into it. So how do we identify these levels? How do we identify supply and demand levels? So supply and demand levels are areas in the market where smart money have placed their selling and buying orders. They usually cause price to move from these zones in a parabolic way. You see big candles often leaving, oftentimes as a short period of time, consolidating or accumulating. So you're going to see big candles leaving an area. Oftentimes, this is before that big move, you're going to see price consolidating, all right, which is called an accumulation phase. And then they fill their orders and then cause price to move away from that zone. Oftentimes, they don't have all their orders filled at the same time. Hence, price has to come back to these levels again to get more of their orders filled, which is now this is our chance for us to trade with them. Okay, this is the time for us to trade with them. The key lies in identifying where these levels are and then trading with them, not against them. So you want actually being able to identify these levels where you know that that smart money have placed their orders, and once you identify those levels, you can wait for price to come back to this level again, so that as they're coming to that level, you can trade with them, not against them. All right. So this is how I identify these levels. You're going to find big selling pressure or buying pressure at a certain level. Price leaving that level with big candles. You want to look at this for 2 to 3 candles, big candles. Right. After that, you draw a level, which I'm going to show you just in a bit. All right. So you can see this level, right? So price left this level in a hurry. Price came, dropped like crazy. You see, came to this level and then it went. So what you do is going to have, there's a period of consolidation. If you go to the lower time frame, like maybe the 30 minutes and the 1 minute, you're going to see that price consolidate at this level. And then what you're going to do is just draw the last bearish candle before this bullish move. Or you can just cover the whole consolidation. So there are a lot of ways that you can draw supply and demand zones. All right. So the first way is to cover week to week. All right. You're going to look at probably the you're going to cover the last bearish candle before the bullish move, the last bearish candle before the bullish move. All right. So this will be the last bearish candle. You can cover the open and the close, and yeah, just extend the rectangle to the right side. All right, and then wait for price to come back to this level. And then look at this. So price was running to the upside, and then it created a base. This is what you call an accumulation, right? So price accumulates at that level or distributes at that level. After that, price drops. Okay, after price has dropped, what do? You wait for price to come back to this level again, and this is an opportunity for you to sell. All right. So what are we selling here? We're selling because this was an accumulation. This was an area where the sellers have placed their orders and took off with these big candles, right? And after price dropped, you are waiting for price to come back to this level. Why do you want to trade this level? It's because we assume the, the big banks have left more orders there because price left in a hurry. Therefore, we want price to what? To drop to these levels again, where we're dropping to these levels here to the next demand zone. All right, it's as simple as that. Identify an imbalance, and then once you identify an imbalance, cover. You can either cover the whole consolidation or you can cover the last, like in this case, the last bullish candle before the bearish move. Cover that and wait for price to come back to this level. And when price comes back to level, you look for confirmation, which we're going to talk about later. All right. So this is the way it is. So price leave this level. So price drops first of all, then starts to change direction. So guys, it takes a lot of money to change the direction of the market. All right. Here it was. We've seen a downtrend, right, for some time, and then price comes drops to this level, right, and then we cannot cause the market to drop to reverse like this. Only the big banks can make the market to move like that. So, for example, price comes to this level and leaves this level. What are going to do? We're going to wait for price to come back to this level and buy when price comes to this level. Of course, without just buying. You're going just to buy or sell because you know it's a supply and demand zone, right? You're going to wait for confirmation before placing those orders. So you can see there are a lot of levels here. So you have one supply zone here. So price leaves these levels, like these levels will always be there. So your job is to actually look for these levels and trade them once you find them, right? So there'll be like big supply zones and there'll be those minor supply and demand zones. So right now we have these small zones, right, and see price was consolidated. It was kind of retracing back to this level and then it dropped, right. After dropping, dropped like with a big move, so which tells me that this is a nice supply zone, and I can draw the last bullish candle before that bearish move, and you see I would draw my level like that, and I'll extend to the right side and wait for price to come back to this level. Once price comes back to this level, and then I'll look for my confirmation pattern or candlesticks patterns, right? Then once I see that, I can sell just like that, putting my stop loss above supply zone and my take profit be at demand zone. As simple as that. I hope it's not really confusing. And please, if you find it confusing, please leave a question in the comment section. Please, please. I want you to understand this. It's very simple and there's nothing complicated about supply and demand. All right. Look, so price dropped, right? After this drop, what happens? Price immediately goes up. I know this looks like there's nothing here, but something was happening at this level. So price did what we call a drop base rally. So this base is what we're going to cover. So as I've told you, like there's a lot of ways to actually trade these zones. There's a lot of way to draw these zones. So others prefer to draw the weeks, week to week. The last bearish candle before the bullish move. Can draw the can draw, for example, the week to week, or you can draw the opening to the closing price, or you can draw the whole consolidation. So after the choice is up to you. But for me, from my experience, I'd rather you actually draw the whole consolidation than wait for price to come to that level. Because if you draw just, you can cover what just you can cover like just one area, one like for example the opening and the closing price. You may end up missing some of the trades, right? So how you draw these levels is very important. So make sure you practice, practice, and practice. Okay, that's how it is. Otherwise, we've seen a drop, base, and the rally. What are we going to do? We wait for price to come back to this level, and once price comes back to this level, what do? You're going to buy, and you're not just going to buy. You're going to wait for confirmation of your buying decisions. All right, which we're going to talk about it later. All right. So yeah, let's move on. So how do we draw the zones? So there are several ways of drawing supply and demand zones, as Eddie alluded to, but the best and more accurate way to draw them is to draw from the last bullish candle before the bearish move and extend it to the right. That's when you're drawing supply and demand. Okay, we draw from the last bearish candle before the bullish move when drawing demand zones. All right. So when drawing supply zones, you draw from the last bullish candle before the bearish move, and you're drawing from a drawing demand zones. You're going to draw from the right from the last bearish candle before the bullish move, and extend it to the right. So I've said it already. You can either draw the candlesticks from the opening and the closing price, or you can draw the whole consolidation. It's as simple as that. So either consolidate, draw the whole consolidation, the whole base, or draw the last bullish candle before the bearish move in drawing supply, and the last uh, bearish move before the bullish move when drawing the demand zone. It's as simple as that, and just wait for price to come back to these levels. Okay, so that's how it is. Last bearish candle before the bullish move, and the last bullish move before the bearish move. As simple as that. Okay, so look at this. Price came to this level, right? And immediately it dropped. And what did you do? Draw the level, draw the last bullish move before this bearish move. You draw like that and wait for price to come back to this level. Once price come back to this level, what do? You sell. Okay? Price drops here, creates a consolidation. What do? Draw the whole consolidation or the last bearish candle before the bullish move, and wait for price to come back to this level. Once price comes back to this level, what do? You buy, of course. And you do just buy blindly? No. What do? You wait for confirmation before buying or selling. Okay, so it's like that. Okay, so I'm sure some of you might have heard what are called odd enhancers. All right, what are odd enhancers? How do they help you trade better? How do they help you find high probability trades? So we're going to look at 5 odd enhancers that I use personally in my trading that can actually help you become much consistent and much better trader. So no, of course, not all supply and demand zones are going to work. Therefore, we should consider certain things when it comes to selecting these tradable zones, with supply and demand zones, right? So here are some of the 5 probability enhancers that will improve the chances of that zone actually working. Okay, so the first question you have to ask yourself is, how did price leave the zone? How did price leave the zone? So basically, you want to see price leaving the zone with momentum candles. You want to see extended range candles, which are called ERCs. Look for 2 to 3 big either bullish or bearish candles leaving the zone. Okay, this creates an imbalance and is a sign that can be a potential demand or supply zones. I hope that's very clear. So you're going to basically look for what? Big candles leaving a zone. You want to look for 2 to 3 big candles leaving the zone. So the first question is, how did price leave the zone? So, for example, this right here, how did price leave this zone? We had like 1, 2 big candles, all right, and dropped. And what do? You just draw the level from here, extend to the right side, and wait for price to come back to that level. Simple. How did price leave this area? 1, 2, 3, 2 big candles. It qualifies, and this becomes a what? A high probability zone. Okay. How did price leave this area here? Look, how did price leave this area here? 1, 2, 3, 4 nice big candles. Therefore, making it a what? A high probability what? High probability zone. Okay. So price left this area with massive candles, and what do? Draw a level at this level. Either cover the last bearish move before the bullish move and extend it to the right side and wait for price to come back to this level and see how it reacted. There was a big reaction after this, after price came to this level, which tells you that this was actually a very significant level. Okay. That's the first question you have to ask yourself. How did price leave the level, and how do you actually identify those level? You want to look for what? 2 to 3 big candles, which are called ERCs, extended range candles. So the second question that you're going to ask yourself is, how long did price remain at that level, at the base? So after price came to that level and left, how long did it stay at that level? So of course, it's going to be different depending on what time frame you're using. Okay, but basically you want price to stay a very short period of time at that level, because the longer it stays at that level, the more orders get filled. Therefore, what are we looking for? We want less orders to get filled so that price can come back to that level again. So you want to increase the chances of price coming back to that level by or less orders being filled. That's going to add to help that zone become more likely that price is going to reverse from it. So you want price to remain at that level very short period of time. So if you're looking at maybe the 1 hour, the 4 hour time frame, you want to find less than 6 candles at that level. When you have more than 6 candles, that level becomes what? Becomes less important, and less likely to cause a reversal. So basically, the longer price stays at that level or accumulates at that base, the more orders get filled. Therefore, the less likely that the zone is likely to hold next time price comes to that level. Alternatively, the less time it spends at the base, the more orders are filled and the high probability of price coming back to that level, and the more orders, because more orders has to be what? Have to be filled. So that's number two. How long did price remain at the level? The lesser the time price remains at the level, the better. The more time price stays at the level, then the less likely the trade is, the base is likely to work. Okay, look at this. So how this was the daily chart, of course. So I mean, like how long did we can just say maybe our price was at this level for 2 days. Okay, so you want price to actually be at the level for less period of time. So after price went up, then it consolidated for a little bit and then price dropped, right? So after price dropped, you wait for price to come back to this level, and this what? Where you sell from. Okay, and when you sell, your stop loss is going to be above this zone, and the take profit is going to be at the next demand zone, because That's how it is. So if make sure your stop loss is slightly above the demand zone, because if you just put it just close there, what happens? Price may just come to this level and take you out and reverse right back into your area that you actually analyze, which can be very painful. So please always remember that never trade this blindly. Always wait for confirmation. Always wait for confirmation. So that's the third one. That's the second one, right? So the first one was how did price leave the level? The second one is how long did price leave the level? How long did price leave that level? Okay, let's go to the other one. So these are the examples, right? So look, how long did price stay at this level? Just two candles. Price reversed. So this makes this a what? A good level. And look what happened the next time price comes to that level. Price reversed like crazy. Why? Because there were orders which were supposed to be filled at this level, right? So you wait for price to come to this level, and when price comes to that level, you look for confirmation. So what confirmation am I talking about? Look for the bearish and bullish reversal candles or patterns. So candles are going to concentrate on are bullish and bearish engulfing patterns and a bullish or bearish pin bar. A pin bar is simply a hammer or a shooting star. So those are the things that you're going to look for in terms of candles. Then in terms of chart patterns, you're going to look for the demand zone, you're going to look for a double bottom and an inverse head and shoulder pattern. Okay? Inverse head and shoulder pattern and a double bottom. For supply, you're going to look for head and shoulder pattern and the double top. So those are four confirmation you should look for before taking any trade. All right. So we'll talk about them later again. So this is how it is. So we'll go to the third one. How far did price move away from the zone? All right. How far did price move away from the zone? So why are we interested in how far price left the zone? How far did it go? So the further it goes, the better the risk to reward ratio. All right. So that if it goes very far, the better the risk to reward ratio, because that's where the next target is going to be. All right. So this is how it is. So basically, when trading this supply and demand strategy, it's actually something that can give you a better risk reward ratio. Actually, more than 3 to 1. All right. So your target is to actually look for zones that give you a better risk reward ratio. At least aim for at least 1 to 3. Okay. So the further price moves away from the zone, the better the risk to reward ratio. And then you have to ensure that only take trades from the zones that offer you a 1 to 3 to reward ratio. The further it moves away from the zone, the more structures get broken and the more chances of that actually working. Okay. So remember 1 to 3 risk reward ratio and above. So remember, that's how it is. So look at this. Price left this area, it came to that level. Okay. Of course, this is more than 1 to 3 risk to reward ratio. Look, price comes to this level and gives us some nice pin bar formation here and a nice bullish candle. This is a nice trade. And what does price do? It goes to this level. Okay. So this is how it is. Like price goes, and from the distance from here to that level is more than 1 to 3 risk to reward ratio, which gives us a high probability trade, right? So let's look at another one. Okay, look, um, price comes to this level, drops, and it's coming back to this level. Look, nice formation of what? A pin bar pattern just right there. And this is a confirmation for us to add to sell. And you can see price is already dropping. So how far the price does it give us a risk to reward ratio of 3? Of course it does. So basically it's like that. So that's the third one. So what is the fourth one? The fourth one is the freshness of the zone. So ask yourself, how fresh is this zone? Is this zone a fresh one? Okay, so why is it important? So if a zone which is fresh means that orders have not been filled yet. So when price leaves a level like this, okay, the more time price comes to this level, the more orders get filled. So you want to concentrate only to the zones that don't have orders, like you want to concentrate on the level which has not been touched, okay? A level which has not been touched. That's the reason why it's called the fresh zone. So if price comes back to this level for the first time, it will fill more orders. The next time it's going to come to this level, it's less likely to work. Why? Because some orders, most of the orders have been filled. Therefore, it's like most likely to break. This is different from support and resistance, because in support and resistance we usually talk about the more touches it has, the more significant it becomes. Of course, eventually, the more touches it has, the more likely it's going to break, right? So that's how it is here. So you want price only to have like one touch here, and once price comes to that level, once the first time you sell, okay, you look for, of course, you look for confirmation like we had here. We had the bearish pin bar, which is a confirmation for us to sell. So this is how it is. You look for only fresh zone. So if you want to take high probability trades, only focus on fresh zones. And these are zones that have got a better win rate because they have more unfilled orders sitting right there. And the more time price comes to these levels, the more orders get filled and the less chances that it will actually going to work. So only concentrate on fresh zones. So look at this, price leaves this area, comes back and gives us a nice risk to reward ratio, drops this level. What do we have? We have a nice bullish engulfing pattern, and there's a hammer there which was formed, and price went up. Was this the first time price came to this level? Yes, this was the first time price came to this level. Therefore, making it a what? A nice high probability trade. That's how it is. Same here. Price right to the upside. It dropped like crazy and it came back to this level again. Was this the first time price came here? Yes, it was. And what did it do? It gave us a nice double bottom and it dropped, double top, sorry, and it dropped. And that's how it is. Simple as that. Wait for confirmation, and it's going to be like that. It's as simple as that. Very simple. So, the fifth one is, does it have overlapping supply and demand zones? Does it have supply and demand zone? Does it have overlapping zones? Okay. By overlapping, I mean, does it have zone on top of another zone? Does it have a zone above a zone? For example, if we're looking at demand, does it have demand below demand? Does it have supply on top of supply? So the more supply zones it has, meaning the more likely it's going to work because it has more, it has some sort of protection. So if a zone has got overlapping zones below or above it, it offers it more protection. Therefore, the more chances of it actually working. So look at this. We had a level where price had this zone here and another zone here. So meaning this is a protected zone, and therefore when price comes to that level, we can sell, and yeah, we just wait for confirmation. So the more of this it has, the better. Price had this zone here and another zone below it, therefore the more chances of it actually working. Okay, so that's how it is. So like I'm sure you've seen things like this. Okay, there's a score I'm giving my trades, like my setups. Look at this. So we had like this chart had the score of what, of 10. So why did I score it a 10? So based on the five odd enhancers I've talked about, I scored them two out of two. All right. So the first one is the strength. Remember the strength. How strong is this strength? How strong is this zone? So how do we determine the strength of a zone? We talked about it already. We determine the strength of a zone by how far, like how price left this zone. So how did price leave this area? It left this area with nice 1, 2, 4 big candles, meaning the strength is good. Meaning it, I give it 2 points, right? And then the freshness of the zone. How fresh is the zone? So ask yourself, has this zone been touched yet? If it has been touched, then you give it a two. I mean, sorry, a one or a zero. If it's a fresh zone, you give it a two. Then the third one is time spent at the zone. Look, you want to find price. You want price to